Hello everybody and welcome back. In today's video, we discuss the stock, commodity, and crypto markets right now, including the key levels that you need to be watching over the next 24 hours into the next few weeks. By now, many of you are aware that April is one of the strongest years in risk on. 15 of the last 16 years have been bullish for the stock market in the US. But on top of that, it tends to be rotating exactly the way we expected. Now, is this the bottom of the pullback? We'll be trying to answer that and more very, very soon. Stay tuned. This will be a great video. Well, welcome back everybody. This is our daily show for the market, recapping the close of the 4th of April 2022. And when we're talking about the news, it can't get any bigger than this. Elon Musk taking a 9.2% stake in the social media platform Twitter after kind of hinting discussion about this, and the shares rose 27%. So a big movement here in terms of what occurred on Twitter. But it was more than that. It was basically a risk on day, and we'll take a look at that very soon and what that means for the month of April. But it was risk on, and I mean risk on. Every single one of the sectors was really pointing towards that. So what are people saying? Well, here's a BlackRock article. Get ready for a new world order that drives stocks and bonds, says BlackRock. So what do they mean by that? Well, basically they're talking about interest rate hikes and how that affects markets. Now, interestingly, on year one of Fed rate hikes, actually we don't tend to see very good stock returns. But coming into year two and year three, they can be phenomenal. Now, does this line up with something we've been discussing recently, which is, of course, yield curve inversion, the canary towards potential US recessions? Interesting stuff. So year one, what outperforms? Actually, value does. Year two, value, and year three, value. So while it's risk on right now, it's interesting that value tends to outperform the general market and, of course, bonds over these periods of time. So let's take a step back and say, okay, what happened during the Monday session? Well, one of the big things that occurred was the NASDAQ just went ballistic at the start. We were actually live streaming the session. And if you don't know, we do live stream every single Monday open, 1 hour before the US market opens. And it was pretty much in line with some of the things we were thinking about. We had it trapped, as in the market's trapped between a key resistance and key support. And it just so happened they broke through the key resistance and it was risk on. And it was all about hyper stocks. That is the sectors that were beaten down the most due to high interest rates. The NASDAQ was up 2%, the SP 500 up 0.81, and the other two markets a little bit lower. But where the interesting thing happens is when we look at the sectors: clean energy, solar, technology in general, semiconductors, biotech, they were all doing well. Look at down the bottom: utilities, healthcare, gold, metals, and minerals. Some of the things that have done incredibly well this year were not in focus for the end of the day or the end of the session. This really exemplifies itself when we look at the heat map here of the S&P 500 large companies. And you'll notice Tesla, 4.91%, breaking through the 11,100 or 1,110, 11,000. Wouldn't that be great? And that level was a key resistance we were looking for. So is Tesla set to go even higher? We'll be trying to answer that very soon. Let's take a look at some charts though, some macro charts, some things that are occurring. So here we have the total US equity futures spec positioning, 5 weeks net change. Now, what you'll notice is that when it goes underneath here, we tend to see rallies. And it doesn't always mean it's the bottom of the market either. When it hits that line, look at the rallies that occur. Interesting. Going into the month of April, we have a lot of rally potential here. That's what it's basically telling us. The monthly or the weekend video that we did here, we talked about major index combined hedger positions. They went from net negative to net positive like I've never seen before. I mean, they were super bullish. Look at how crazy they went. So it all became net positive, and that's again going into one of the strongest months of the year. When we talk about inversion, a lot of people freak out about inversion. We asked the chat last night, I would say about 30% to 40% of people were freaked out about inversion, and the rest of you were not really that freaked out. It's probably better to not maybe be freaked out right now. Remember, the average time between the 3-month 10-year, which hasn't even inverted yet, is 15.4 months before a recession began. What do you notice on the right-hand side here? The huge returns, 13.4% over that period of 15 months. That's higher than normal. And if we look here at the 10-year, 14 months, 14.74% average. And remember, there are some years here where if you go back and look at the US market, they went ballistic. I mean, 98 to 2000 was a ballistic time in the markets. So remember, markets can stay irrational longer than you can remain solvent. Fighting the trend sometimes can be very hard. And at the moment, it's risk on, and that could be all that we're getting. We also did a 5-month, 3-month study, or 5-year, 3-month study that a few people asked for. I think this is made from someone in the Discord community. Join the Discord community if you're interested in getting involved in the public or private community down below. And yeah, it was interesting, but it didn't really show us anything stronger. I still think 2-year, 10-year is really, really good, and it's one I look at. So just some quick stats for people that haven't joined us before. 15 of the last 16 years, 93.8% positive for the month of April. What else do we have in April? We tend to have Good Friday, we have Easter. We know that usually public holidays drive price, plus we've got earnings anticipation, which drives the price through April. So will we see a sell-off at the end? That's the question that really a lot of people are asking. It's not really whether April's strong. Statistics say yes. It's more what happens at the end. So let's now take a look at the SP 500 midterm election years. This is where things get interesting. Look at the back of April. We've talked about this so many times, but I've got to bring it in all the time because it's important that we understand this. We expect a rally. That's based on the data, based on the technical analysis as well that we'll look at very soon. So we expect a rally, but do we expect a sell-off similar to what's occurred in the past? That is a drop in the market, the sell in May and run away or go away kind of philosophy. Well, it's been a while since that's actually occurred. So it's something that we're certainly on the lookout for, but the technical analysis will have to show us. Data's one thing, but technical analysis and price action and the psychology of the market really helps us out. Let's take a look at the US 2-year versus 10-year. Here is the inversion. Obviously, we're all aware that's occurred. Very steep. Maybe not something we freak out about right now, but in the future, we need to keep it in the back of our mind. Never forget when an inversion occurs. You've got to be careful after that point. The VIX, or Volatility Fear Index, is dropping. Of course, this is significant when it comes to the way that we think about markets. If it's under 20, usually that means the bulls are in control of the markets, and they certainly look to be in control at this point. Let's move over to another thing we look at here, which is percentage of stocks above the 50-day moving average. So this is really getting quite good. Now, we know that when rallies occur, especially this rally that happened in 2020, it went ballistic. And if we look at some of the other rallies that have occurred over time, it tends to go up. Sometimes when it hits too high a level, e.g. 80% of the stocks are above their 50-day, that can mean a little bit of a heated market. But at this point, it's right in the middle, so it looks okay in terms of health there. We'll go over to some commodities first. What's going on with gold? Well, I would say it's trapped. And we've mentioned this several times. We have an 1895 support, pretty important level, and we have the resistance here at 1962. Basically, the market's trapped between these two zones. Long leg doji last week, and it's still currently holding between the 1950 and the low here. I think you've got to be very careful if a market closes lower than this zone, because that'll be the first closure out. But we don't really have too much of an opinion on the current gold markets. If you look at it on the weekly, it's similar. Hard to really get a good call on that at this stage. Now, if we're talking about things like US oil, let's load up US oil. We were pretty much correct as a community, and I want to say congrats to you guys, that rally was short-lived and ended up selling back off. It's now rallied a little bit over the last 24 hours. So let's have a look here at the 4-hour and break down what we're seeing. Do we have a bit of a trend line kind of breakout? I guess if you're feeling bullish on oil, it looks like it might move up. I think this market's still unclear. And that's the big problem. We know that we've got like a bit of a support resistance around this 107.50, but oil is going to be unclear for a while because remember, it went parabolic. And after a parabolic move, and especially a crash like it occurs, it can sideways for a while. Big ranges, but no clear, strong trend direction, at least for now. And we're not saying we're out on oil. We're just saying that we don't necessarily get clear vision of that right now. And that's important. You need to have clarity in markets. Speaking of clarity, is this Tesla's moment to shine? So it's broken through the 1100 here and 10, the resistance that we talked about. Let's actually look at this on principle. Some people will call this a little flag. Now, if you believe that was a flag with a giant pole, my goodness, can you imagine how crazy Tesla would go? But we've got to deal with the first big problem, and that's going to be 1200. So let's understand the 15-minute chart here a little bit. So for Tesla traders for the day, pretty much the big sign was, I guess, getting through this kind of series of lower highs. That is lower high, lower high, and then all of a sudden it breached through, especially the 1,110. We've been talking about that. At that point, it became risk on for Tesla and it flew for the rest of the day. Really nice percentage here. It ended up 5.61 and it wasn't even the strongest stock of the day. It's now in the middle. So pullbacks to something like this 1,110 area, do you think they're going to be met by demand? Well, it's certainly a good possibility. Why? Previous resistance becomes support, the idea of role reversal. So this is where Tesla becomes a little bit more exciting, and maybe we move strongly here to the next level, the 1200 level. It seems the most likely outcome based on the current charts and the current analysis that we're seeing. The story wasn't really just about Tesla though, it was more about hyperstocks in general. Square is something we've focused on this channel as a Wyckoff accumulation, and it rallied pretty hard. This in the live stream was some of the stuff that we were looking at. We were looking at hyperstocks, and guess what? They all looked really positive, whether it was a Twilio or an Etsy or a DKNG even, or an SE or TAN or any of those things. They all looked positive. I mean, look at these breakouts. Consolidation, coiling, breakout. Does that mean risk on? You'd have to think so when you're starting to look at these charts. Another way of seeing risk on from a bit better conceptualization is looking at consumer discretionary. If the market's bullish on consumer discretionary, that is basically 1/3 of the US economy, consumerism, then it's feeling pretty good. And at this stage, it turned around. You can see it's suddenly gone bullish. So that's again a positive sign for the markets leading into April. This doesn't look like a bearish looking market. And we've said that for a while. We've really cautioned against going against the price action here. We've talked about Apple getting out of control and having a pullback last week, and it did. Guess what? You were all right. As a community, you guys were right. Apple did pull back, but then it suddenly ramped, and it ramped really hard. So let's take a look at Apple here on the charts. And this was something we mentioned on the weekend video. Bullish hammer. If you were trading this as a day trader, what are you looking for? Follow through momentum. Follow through momentum occurred, and it went boom. Am I bearish on Apple anymore? Well, no, we wanted the pullback based on the fact that you had 1, 2, 3, 11 days straight. It got a pullback. Would I have preferred it down here? Absolutely. Absolutely. Everyone would have. The problem is everyone would have. Sometimes you don't get what you want. And this channel, this particular little candle here ended up going long. On the day, on the live stream, we were talking about it. Whether it went bullish or bearish, we didn't really know. We didn't know on the day. We had a suspicion it could go bullish. Again, the chat actually was 60% bullish, 40% bearish, but it didn't really happen until the risk on parameter happened right there and it went through. And that happened basically at the open. So yeah, could Apple make all-time highs here? It's certainly gearing into that kind of idea. Let's take a look at the DAX. The DAX is still holding the 20 moving average. This is the European market. We're using that as a bit of a guide on whether the market's risk on, risk off, in terms of the philosophy around Europe and obviously the Russia-Ukraine tensions. And at this stage, it's holding that 20 moving average and it seems to be trying to rally. A big sign here that the markets really love themselves is if the DAX is able to break through this zone up here. So 14,900. Support across the world. Of course, we have a Wyckoff distribution here. And imagine if it broke and closed above that. Wow. It would be super bullish from the perspective of risk on, risk off. Another lead indicator is IWM. That is the Russell 2000. It did okay. It held itself, obviously created a little bullish hammer here. And if follow through occurs, what can occur? That means potential more risk on. And we finally break out here on IWM. Again, a bullish sign here for markets from that perspective. If you're a bear, this is not really what you want to see. Let's move over to the US 100. Now, this is where things get really interesting. The NASDAQ, the SP500. So by a lot of people's reckoning, if you actually look at the NASDAQ, we'll load it up here, or the QQQ, that looks like a rejection candle. I mean, it certainly is. If it had flowed through and we get a rejection as in it comes back down and closes below that, bears will rejoice because at that point you're talking about it coming back to, more significant levels lower and potentially then getting the roll. That's not what's occurring. Imagine if we end up getting a bullish week here and it closes above. I mean, again, very significant closure above the previous resistance, above the resistance it just wicked off. That would be a big deal. So let's now take a look at the daily here. And it was the same story in the S&P 500. We had a resistance and a support. Of course, I put them on the charts here in the live. These were the two key levels. And it was risk on almost from the first minute the bell started. Bang, the market just went crazy. And the buyers came in and they came in hard. Now, sometimes you miss opportunity. Is that all we get? We've got to just kind of look here from the top to the bottom. It was 3.52% down. Not that far down considering what happened. But look, it's an aggressive market coming into an aggressive time. If you put a fib on the whole thing, it gave you a 23.6, basically the most aggressive fib that you can take. And 23.6 may be all we get here. Again, new all-time highs, especially with the weekly close. I'm not sure if I'd bet against the market from a technical perspective right now, at least what we're seeing. Now, the story is again here in SP 500, bullish hammer. Again, we had the lineup. You can go check our live stream. That's what we were talking about. And it got even a little bit better here when you load the US 500 futures up, because if you actually look at the 15-minute, there was a little inverse head and shoulders here on the smaller time frame. So you can see the left, the head, the right, and it breached through after creating pretty nice kind of two rejection candles here, and it breached through and led to, of course, risk on for the rest of the day. So, you know, what happens in the next couple of sessions? Well, if the market now comes down to these zones, is it met by buyer demand? You'd have to think so. People are going to be feeling FOMO and feeling like they're missing out. Of course, that leads to the follow-through effect. If you're feeling bearish at the moment on the markets, well, it's pretty simple. I mean, if the market is able to go underneath this 4,500 low, remember, if it goes underneath that 4,500 low, then all of a sudden, yeah, I mean, you're talking 4,400 pretty likely, because that's the next level that the market would want to go to. Of course, that would be very bearish. So if the market went like boom, 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 certainly not good. And at that point, you're talking, okay, let's go back down to here and see what happens. But based on what we've just seen, it's a bullish hammer followed by a bullish candle. And as it goes up, and if it does get past last week's high, especially with a weekly close, what will happen? It'll be closing above a rejection wick. That's to be told. We don't know that yet. But certainly a strong looking thing in this markets. And it does show risk on across this board. I know it seems bullish. The problem is, how do you fight the data? How do you fight the seasonality? And how do you fight the price action going with you? It's very tough to be a bear in the markets at this stage. Let's move over to Bitcoin. So we certainly got this incredibly correct as a community, and I want to congratulate you guys. 38.2 fib pullback back to the previous closure highs here. Fantastic. Bullish hammer, or at least a bullish move off that. Two rejections, and then now a bullish one. It's kind of chilling in the middle, thinking about its next move, having a bit of consolidation. If the market rallies, where do we expect it to rally through? If it gets through 48, next level could be 52. Why is 52 key? Because, of course, if we look here, resistance, 52, 52 makes sense. That's the next participation zone. If you put something like a volume profile or whatever on, you'll end up finding that this level here is pretty key. So that's a zone that we'll be watching. Of course, Bitcoin looking good. Bitcoin shorts, something we look for to see whether the nasty whales are attacking Bitcoin. Still low. Again, that is predominantly good for crypto markets across the board. And you guys have been incredibly correct with the idea that Ethereum has been stronger than Bitcoin. Of course, it's getting closer to where we believe Ethereum should have been, which is around this zone. And remember, we were talking about this all the way down here, saying Ethereum should be stronger based on the breakout than Bitcoin. It's been in line, and now it's been comparatively stronger. Always consider these charts. And if it moves up to that level, okay, well then maybe Bitcoin's going to be stronger. At that point, you start to really reassess which one you want to be in. But Ethereum looking good. Ethereum on the charts, there it is. Again, stronger, you can tell. It's already ready to try to break out. And if it does, it could be going for a bit of a rally. Will it go next to just under 4,000? Well, that's a time will tell question. If you haven't already, come and follow us on FX Evolution on Twitter. Obviously, that's the place to be now that Elon owns it. And just in regards to Twitter, obviously a big move, 27%. If you look at it on the charts, you can find some role reversal there. Be careful in a position like that. It's mostly a FOMO style trade, and they do tend to have pullbacks in them. That's just usually what happens. Let's move over to the big news coming out. So we've got Tuesday, ISM Services PMI, 10 a.m. New York time. Then we scroll down, FOMC meeting minutes, 2 p.m. So markets often kind of rally into these FOMCs, drop during the FOMC a little bit, and then rally again. That's actually what we've been seeing through the last couple of times. This will be a real a really interesting kind of meeting, and certainly some news or risk event that people will be looking at. And that's the main news for the week. I mean, there's not that much more. Thanks so much for watching. If you enjoyed the video, subscribe, smash that like button. We'll see you in the next one. Bye.